If you want my results or my students' result in your life, you need to learn and practice everything you see here for maximum results. And the 5 ways to confirm daily bias is through 1. Candlestick science, IRL and ERL, volume imbalance, swing point, and number 5, PDRAs. Starting from the first one, which is candlestick science, and how you do this is not by using patterns or the likes of that. Candlestick science is basically when you look at one candle like the previous candle out of like a lot of candle and then judge what's going to happen next or predict what's going to happen next from only looking at that candle. And this is not using patterns because patterns consist of consistent or different candles. So this one, you just only need one candle, essentially the candle of the previous day, or let's just say the present candle showing you what's happening currently in the market. And one look at your chart, you are going to see that the present candle is a bearish candle, and the mistake most people make is that they just go in to sell at this point here without any PDRAs or anything to refine their entry rate and the likes of that. No, you don't want to do that. Instead, you want to go to your weekly time frame, which is where I am at this moment in time. I want to spice things up by doing or understanding these 4 things. And how you research the right way is, firstly, you want to be early or late. Let me explain further. Early in the sense that you open your chart before market open, and late in the sense that you open your chart to check or confirm your daily bias when the market has closed. Let's say if you trade on London or New York, you either want to check your daily bias or confirm it 30 minutes before London session open or 30 minutes after New York session closed. And how I applied this first step on my first trade is that I went to weekly time frame. Normally I'm supposed to do it on 30 minutes, but we have different time frames for different alignments. So basically for this one, I'm using the weekly so and so and then so and so time frame. And basically if you look at this schematic, you see that before the London session closed or the New York session open, you can see that the candle was giving us bearish sentiment, and that was when I moved to the next point. And then I did something different for high rate, which is what we call swing point science. So what you want to do is you want to apply the swing point science on at least 10 to 15 candles, past candles. So mark the low of the candle and the high of the candle, and if price takes out the low, and let me mark that this for more understanding. Let's say this is Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday. That's marked. If price takes out that Monday low, then that is sign that the momentum is bearish, and then you want to go to lower time frame to get PDRAs, which I'm going to explain soon. So if it takes out the Tuesday low, the momentum is bearish, and you want to be focused on where it closes at. Like if you look at that point there, you can see plus close at that top day. That's why it is still bullish. And the next candle, which is on Friday, you can see price closed below that point there. But why I say tag this point as still bullish is because the trend was, the candle before was bullish. But if you look at the next candle after that one, which is a bearish candle, you can see that price did not take out that low there. So when this stuff happened, if price did not take out the previous candle, like if it's bullish, if price does not take out the low, the trend is still going to be bullish until you see what happened on Tuesday. You can see as price cleared that Monday low. That's to show you that the trend is now bearish. And then if you look at the Wednesday, you can see that price was ranging. You don't want to trade all this kind of daily bias candle. If possible, you want to avoid it, but I'm still going to be teaching you how to trade it. But it's better you still wait for price to like clear the low of that Tuesday and forget about that Wednesday candle low. And then when the Thursday candle clears the low of that Tuesday, then you want to go down, look for lower time frame PDRAs and trade the sales, or wait till Friday to confirm. And you can see on Friday price cleared the low of that Thursday low there, and you can still do the same thing, go to lower time frame, get PDRAs and then sell, or wait for Monday. And what do you do on Monday? You can see it was giving us bullish candle, but we don't care. We don't care because the sentiment is still bearish. So even as it's showing me this bullish candle, I'm still going to be looking for sales And what I'm going to do is that I'm going to use the third point here, which is basically going down to intraday time frame. So basically there's ultra and there's intra. The ultra is weekly, 1 day time frame, and H4 time frame, while the intraday time frame is the 1 hour time frame, 15-minute time frame, or 5 or 1 minute time frame. So basically I'll be explaining the best time frame sooner in this video. And what I did is that I dropped down to 1 hour time frame and used one out of the 3 entry schematic I'll be teaching you guys in this video. So for this one, I'm going to be using the breakout entry model. But before I did that or use that entry model, I had to confirm the bias there. So what I did is that if you look at that point there, you can see price was breaking lows at that point there. So I marked it, and if you look towards the other side, you can see it started going up and stopped breaking other lows. If it's not breaking other lows and you have gotten your high HTF direction, you don't want to go in until you take out the second low, which is what happened there. And then when it does that, you want to look for PDRs. And what are PDRs? PDRs are literally in form of fair value gap, breaker block, order block, proportion block, and the likes of that. That's what we call PDRs, and there are more. So when you get your PDRA, you want to mark your PDRA. Basically for this one, my PDRA was this supply zone there. That was my PDRA, and then I started increasing my lot size there. You can use a small lot size and just like spam multiple position, or you can just max out your lot size and just hit it once. But me, I like to like reduce it and then spam multiple positions, so I can, like, if price is going down, I can keep increasing, and then they'll not tell me that, you know, my margin is full and the likes of that. Because if your lot size is big and then price start going down, you're pressing 1 to 0.10 to not go in. But if it's like 0.01, they cannot tell you that it will not go in, so you just spam in bulk. And in the beginning it was looking like this, that, but you know, you have to be patient and wait, and eventually it's going to give you your bet right. And if you go to, and what I did is that I went to like 1 minute time frame for more entry, and what I did is that I saw liquidity grab happening on 1 minute there. You can see, or let's just call it the consolidation. You can see that price did not take out that high there. That's to show you that even on 1 minute time frame, the trend is bearish, literally bearish on the weekly, on H1 time frame, on 15 minutes will be this thing, and then on 1 minute time frame. That's crazy. And you can see how the drop was happening very, very fast. You can see, this is literally what happens when you know what you are doing. The market just have no option but to just pay you. That's it. And then you close and move to the next trade, which is on gold. The last one was on GBPSD, and this one is easy to understand. You can see the candle was clearly bullish. Price was clearing highs and was respecting lows. So basically I was looking to continue the bullish move. So what I did is that I went with another schematic and another entry model. This is what we call the continuation entry model. And how you trade that one is that you want to go on lower time frame, which is on H1 time frame, and you want to look for PDRs. So what I did is that I went lower and saw it clear, and I saw that it was clear. You know, you can see on 30 minutes I was seeing a clearer PDRA at that point there. So what I just needed to do at this point is to drop from 15 minutes to 5 minutes to look for another PDRA, and the one I saw was very, very tiny. Like, it's so unreal, and I was happy that I was like active in the market to catch this sniper entry there. The PDRA I spotted was literally at the gap of that point there. You can see the gap of that bullish candle there. That was literally a bullish fair value gap there. I can see how price expected it and started going up very, very fast. And if you think this is the end, yeah, if we go to 1 minute time frame, you can see price was expecting that lower time frame demand zone there. That's literally another PDRA at that point there. So I was expecting price to like clear out all those highs, since it has been clearing out highs on HTF PDRA. So I was just expecting price to like keep doing the Lord's work, and that's it. You can see free money, and I walked away with huge profit there, and then went to the third schematic. And this one was on Euro USD, GBP, gold, Euro USD now. So for this one, what I did is that I zoomed in, like, so I can see what's really happening in the market. And if you look at that point there, you can see that price took out this low here. That was showing that there was bearish momentum. And assuming price has taken out this point here, I would have been looking for buys, but you can see it did not take out that high there of that low. So when it does not take out the high, that states that the momentum is still bearish. So I dropped down to lower time frame, and my plan was to catch this breakout to that low at that point there, because you can see that price was giving us a lot of consolidation at that point there, and whenever there's a consolidation, eventually there is a breakout. So on 1 minute time frame, I was waiting for price to break out from that breaker block there. You can see that mini breaker block there, and it was giving us something like a head and shoulders pattern there, which is another good confluence. And just look at how it was dropping. Look at just look at the beauty of this. But even with this, I wanted more, so it was time to spam and increase my entry. So when price was about to break out from that demand zone there, I started hitting more position. You can see, look at how it's looking on 15-minute time frame. It was literally at the demand zone. But when your confluence is strong, you don't need to be don't need to be scared. Even if it's at a hitful demand zone, it is going to drop at the end of the day, and it actually did. And on the next day, I still waited for more entry. So, and I saw that the next day I was seeing a red candle. But this though, I don't care about this. As long as it has not taken the low of that my green candle, I'm still going to buy. That's my sniper entry there. And today, this is the next day. So I'm still looking to buy at this point there. So if your bias does not change, you still keep doing the same thing. That's it. So I dropped lower on this thing, like, to get more entries. And I loved what I was seeing here. Price was literally rejecting from a demand zone there, literally at 50%. And also is kissing that breaker block, or let's just say support zone there. So I just went in, and I was like, I was not even going easy on the entry at all. I was going in, and I was even making losses in the process. Look at the red spot. You gotta keep going on. So I kept on spamming entries, and my equity kept reducing. But that's the price you have to pay. You have to take huge risk to get good, decent returns. So I was spamming, and still price kept going down. It was still going down, like, what the F? Instead of going up, it was going down. But me, I no panic, because this is just a regular day. On H1 save, you can see it was almost reaching the end of that point there, and eventually you can see insane results. That's it. You just have to be patient, and then when you're okay, you close. And at this moment in time, I decided to use the consolidation entry model. So after buying, you know that whenever price goes up, there's a high probability that it's going to come down to balance volume. So basically, I was expecting price to reject from that inverse fair value gap there. I see price took out that FEG, went back up. So what I was expecting is for price to expect that FEG, go down, and maybe keep going up. But this kind of consolidation where they feel this was not looking good. You can see up, down, up, down, up, down. This shit is gonna give you headaches if you don't know what you're doing. That's why you need more confirmation, which is one, that Quasimodo entry there. I marked the top one and then marked the lower one there. You can see whenever stuff like that happen, there's a high probability price is going to drop. Like this Quasimodo entry works like magic there. You can see that as fast as it just formed, it started dropping very fast. It started dropping. It does not even waste time at all. So you don't want to waste time with the spam also. When you are okay with the profit, or you like price is almost breaking out, then you can now hit more position. You can see it was just dropping. Like, this is literally a very, very simple but easy strategy to do. So basically, you can see the drop was happening very fast. And if you look at my portfolio, you can see this was in blood there. You can see I was barely making it alive there. And then, boom, I started seeing results. Price was already reaching that line there. And the best way, like the safest way to trade this is like just to close around that line there. That's literally how most people trade Quasimodo. They close around that line there. And I was not greedy at this point. I closed because it's better to see 10% than see nothing trying to chase extra 5%. So I closed again. And then when price went back, I hit it again. That's it. Want to hit it again? It's better you close, then go back. When it goes back up, you hit it again. That trying to like catch the swing at once. Because when you go back again, when price gets back up again and you hit it again, you have more of a bigger balance. You understand? You have more of a bigger balance, so you can enter more position. You can see I entered at 50% of that Quasimodo, and then I started entering again where price was going down slightly. At this moment in time, the best point to enter again at this point is outside of that line there. If I keep knocking it around that point there, then it's going to be very, very risky. So you want to wait for it to at least slightly be breaking out there. Although I was still spamming when this thing, but this is not the best way to trade. You want to wait for the breakout to occur first, and then that's when you want to go in. And from each 4 time frame, you can look at the beauty of this here. You can see, but this is mainly not even up to 100%. So I knew that the job was not done here, but I still closed regardless around 1k when I was up 1k. So I don't get too greedy. So I went to GBP USD next, and if you look at the candle, you can see it broke out that low slightly. So I was looking for like sales because it took out that green low, that green candle there. So basically, I was looking for where I'm going to sell from, and if you look at that point there, you can see that there was a PD array at that point there, which is in form of another block there, and I was just hitting it. That's it. And this was when I started increasing the lot size as it was dropping. If you look at that corner very well, you see that as it was dropping, I was hitting it. That's it. You don't want to be going easy. And if you look at that point there, you can see there was another PD array there, which is in form of a FEG there. Look at the space between that candle there. That's it. A supply zone PD array, a fair value gap PD array. What else do you want? This is literally a perfect entry there. That's it. A perfect entry, and it was even giving us 50% mitigation. That's it. Crazy. See? It was giving us 50% mitigation, and I was not okay with that profit there. That profit was too small for me. So I knew that I still had to step up my game. So I was still hitting it as it was reducing. I was hitting it. I was using my balance. You will see that my balance will be reducing. I was using all the balance on my account, all my equity, everything. I was putting it on all this trade. Like I was I wasn't playing here. I was hitting it. I wanted to make sure that I clear every single thing. And you can see when I was up 5k here, I was still not satisfied. I still hit it because I want to drain that balance to the max. I want to make sure I drain that balance, because if I drain that balance, and even if $10 is up there like this, it will know, as long as I don't enter drawdown, I will still be making profit. So I want to make sure I drain the balance and put everything on trade. It's just like an investment. It's just like an investment. You are investing your profits, and when you are making profits, you invest it. But it's just the drawdown that is the issue. I swear to God, it's just the drawdown. If you are okay with the drawdown, like seeing your balance reduce slowly, I swear to God, you're not gonna have any issue. So you see, it was reducing small. What did I do? If you think it's over, you have no idea. I still hit it again. You can see I was waiting for it to like increase small, and then you see that demand zone there. I hit it again at that point because I know that price is going to liquidate all those people that are trying to buy there. That's it. We are trying to, I'm literally going against those people that are buying. And you can see that in all those trades I've taken in the past, all these breakout trades, you see that I've used this a couple of times and it still works. So if someone is telling you that if you are selling at someone demands it's not going to work, the person is telling you garbage. He's telling you garbage. All these small boys that don't even have a lot of data to back up their stuff, that will just come online and be saying the rubbish. I have data to back up every single thing I do. So you can see I was selling at that demand zone there. You can see my balance has reduced to like 400 at this moment in time, but this was not enough. I still wanted to, like, just look at it. This is literally, oh my God, I just love this skill. That's it. So if you want your account managed for the next video, click link in description, like, subscribe, and I'll see you guys in my next video. Peace.